Hello, you're watching Smart Money. I'm Alishia Seckam, and today we're going to be getting a better sense of the man behind some of the thinking around Naspers and Prosus investment strategy and how exactly that thinking is positioning the group for growth. Bear in mind, this on the back of Naspers and Prosus having hit profitability in their consolidated e-commerce business by the 2024 financial year end. He is Ervin Tu, Group President and Chief Investment Officer at Naspers and Prosus. Ervin, thanks so much for joining us today. And before we get into the nitty-gritty of the business itself, I want to take a step back to the academic launch pads of your career. You graduated from Dartmouth College and then did an MBA at the MIT Sloan School of Management. How have these qualifications helped pave your career path?
First of all, I'm very excited to be here, so thanks for having me. I haven't been asked about my educational background in some time, so what I'd say is I was very privileged to of course, attend both of these institutions. And I came from a very middle-class upbringing in the U.S., from immigrant parents from China. And the opportunity that the U.S. college system affords to change people's trajectories was one that I was I was lucky enough to take advantage of. And they've made a huge difference in the trajectory of what I've been able to do since. So very privileged, very grateful for that chance.
Yeah, and like you say, it's been quite a career that it's set you up for. You were MD of the tech banking business at Goldman Sachs. You were managing partner of SoftBank's Vision Fund as well. And it's that global perspective that you now bring into Naspers and Prosus. So how have your previous roles prepared you for your current role as you help position the group in the market?
So as far as the professional preparation for what we're doing today, of course, every experience adds to the mosaic that I hope I can bring to the job and guiding our investment approach at Prosus and Naspers. From Goldman, I'd say, of course, an appreciation of the power of technology businesses to transform and disrupt. We were the leading advisor to many different companies in Silicon Valley, both in the context of public offerings and M&A. But also excellence. Goldman is a world-class institution, and I have every aspiration to make sure that whether it's Goldman where I was or Prosus and Naspers today, that we pursue excellence. We want to be a world-class place. So that's what Goldman, I think, brings. And then SoftBank, the global perspective for sure. I was on a plane to Tokyo every month and then to London once every 2 months. I was negotiating with partners in the Middle East. And so I've been around the world with SoftBank and had the opportunity to really dream big and lead huge deals. So I was there and grateful for the chance to lead our investment at the time. I still say our, but when I was at SoftBank, I led the investment in Uber, which was a $7.7 billion deal. And then ByteDance, which of course is the parent of TikTok. And that was over $2 billion in the first check. So I've had a chance to do some very big things at SoftBank, and that also brings with it today the opportunity and also the inspiration to do bigger things here as well.
That said, what exactly are your responsibilities? Because while on the one hand, you're working at simplifying structures at a company level, one imagines the Prosus spin-off adds a level of complexity to your job, Ervin, dealing with separately listed holding companies. So, what does the average workday look like for you?
I wish there were an average workday, but of course it's dedicated to spending time with our investment teams, with also our operators, and trying to enhance the performance of our existing portfolio of holdings and to invest new seeds into the ground that we hope will sprout and become, huge trees that are growing to the sky. So the job is varied. It involves spending time with our shareholders and involves spending time thinking about how we can elevate our platform in terms of public profile, which we hope will create benefits for us in terms of both operating and investing, better connection to different markets, better connection to important regulators and so forth. So it's a pretty varied job. That's what I can say about that. There's no average day, but the principle behind everything is to how to create, much more value in this group, because you're right, we are complex in structure, but ultimately everything simplifies to enhancing the value of our net asset value, enhancing the value of the group.
Okay, so turning to the business then, that's keeping you on your toes. Naspers and Prosus seemingly turning the corner. Right at the top, I touched on the performance of your consolidated e-commerce ventures, which eases some of the burden of the losses you continue to experience on other fronts, Ervin. How sustainable is the stronger performance as you see it?
We are extremely confident that the trajectory that we've demonstrated over the last 18 months or so, when we changed dramatically the operating profile, the consolidated portion of our business, that will continue. And so we look forward to showing the market the results that we anticipate in a couple of months at our interim half-year results. And we look forward to even more performance from there. There is no question that we are utterly focused on continuing the trajectory. That's one. Secondly, we are also very focused on improving the performance of our minority holdings, our investment portfolio, and much more smartly deploying capital into new opportunities where we think there's tremendous potential to create value.
Yeah. What that means, though, is having to shift, right? Making tough decisions, especially given the transitions we're seeing in industries across the board, triggered by rapid tech advancements. Naspers, with its traditional media business, certainly having to adapt its strategy and where it disinvests and then reinvests. So next question to you is twofold. What's your take on AI and the developments we're seeing there? And how's that influencing the kind of investments you're making in this space?
Well, you allude to shifts in the sand because of technology, and that's not new to us at all. In fact, that's our sweet spot, right? Even as a group, you've seen us over the course of many years transform ourselves from what was a principally media company and pay TV company to an internet company, consumer internet company, or commerce company. And we will continue to change. And so this shifting towards an AI first world, we feel actually very comfortable with and very excited about, because we have an opportunity, particularly with our set of businesses around the world, which have already been deploying AI, to demonstrate the value that AI can bring in an operating sense, both in terms of providing new experiences to customers that delight them in ways they'd never imagined, and also enhancing the operational efficiency with which some of our businesses provide those offerings, whether that's logistics, whether that's customer support. There are a whole host of arenas where AI can help, not just on the customer offering side, but also on the support side. So we feel very comfortable with it. As far as what it's doing to our, how it's affecting our way of investing, we are, of course, looking at what we consider to be leading edge, on the frontier, AI-focused ideas in smaller companies, which can help our ecosystem of businesses today, our current portfolio, and are also attractive in their own right as investments. But we will also look for opportunities to deploy larger checks in businesses which are perhaps not principally AI, but using AI to help their business in a better way.
Yeah, I get that, right? And I mean, you've placed considerable emphasis over the recent past on building ecosystems around your portfolio businesses that support business growth and bolster resilience as well. And AI certainly works to enhance that capability. Still, with the intense competition in the tech sector from players like Alibaba, Amazon, how does Naspers Prosus plan to differentiate itself?
Sure. So the AI game right now is being discussed in the form of the big tech players like Alphabet and Microsoft and Amazon and NVIDIA and everyone that you know and everyone hears about. They have compute and they have processing. It's also being navigated by the likes of OpenAI and a new class of companies, Hugging Face and Anthropic and so forth. What we have, though, is a set of businesses where we are actually deploying AI in practice. And we have experience doing so. we don't just have a supplier-customer relationship. We actually own these businesses, or we're a large shareholder in these businesses. And so we have a front row seat as to how the technology is actually working in the field with customers or in the field in terms of operating efficiency. We have a differentiated view there because we actually own these businesses. So I think we have a very differentiated view as to how technology can evolve with respect to AI in practice. That's our view. That's our angle.
Yeah. I've got to ask, what's it telling you about what the market's demanding right now?
Well, there's a big debate that started to emerge about return. And of course, there's so many billions of dollars being invested in the capital side, heavy infrastructure side, compute capacity, and so forth, GPUs, of course, been less clarity around return. Where is the financial return to all this investment? Well, we already see it. That's what it's telling us. We see it in spades in our food delivery business in Brazil called iFood, where they've saved hundreds of millions of dollars because of a more efficient way they now deliver customer support. We see it in our classifieds business in Eastern Europe called OLX, which both on the customer and operating efficiency side have enjoyed great gains, has enjoyed great gains. So what I'd say to you is we're very optimistic. This is perhaps what I was just alluding to earlier. The differentiation is we actually see what's going on in the field. We actually see the return. We don't have compute, we don't have processing, but we have that practical in the field experience.
Yeah. AI aside, Ervin, what are some of the other areas you're looking to invest in, leveraging the fact that separate entities allows each of your companies now to pursue more tailored capital allocation strategies aligned with specific growth objectives and market opportunities?
Well, I'd say, actually, just to respond to your last statement, we allocate pretty centrally, actually, across the group. Our operating businesses themselves, of course, have the autonomy to pursue directions that they think are in their best interest as well, subject to some of our input. But with respect to new investments, it's really handled quite centrally. And what I'd say is that we're very excited about beyond AI opportunities in India. We've been very long India for many years. We've deployed over 8 billion of capital actually into the country, and we intend to deploy much more because we see the rising tide there. We see the power that technology can have on a whole host of industries across the board in India. We think again beyond AI, because AI is sort of horizontal and touches everything. We think that there are other areas such as fintech, where we have a play right now. We have a large payments and credit business in India. We have some credit businesses in Brazil, in Eastern Europe, and even in Turkey. We have a payments business called Iyzico, which we're very proud of. That there's more opportunity for fintech to create great value around the world. So that's one area, just to give you an example. And then the other one comes to mind. We haven't done a lot of work yet. We've been dabbling in some smaller checks. Is healthcare, right? This is one of the absolute fundamental human needs. It tends to be a good thing when you invest in big areas where people, it's not a discretionary thing. People need to be healthy and stay healthy. So we think there's great opportunity there. And by the way, AI can be hugely impactful in the arena of healthcare.
Absolutely. Okay, so all of that said, Naspers and Prosus continuing to sell Tencent as part of a share buyback scheme. Does this remain a good strategy to add value to shareholders where, you're using capital to buy back shares and yes, narrow the discount, but that meaning having less to create value by deploying more capital for more productive use in these areas that you've identified?
So first of all, we love Tencent. Tencent is an incredible company. We learned so much from them, and we've also benefited from their value creation over many, many years, and we expect there to be much more value creation to come. The buyback is designed in a way which creates value for our shareholders when the discount is high, and the discount is still high. By our math, it's in the high 30s, almost low 40s still at a group level today, Naspers and Prosus on a blended basis. And when that's the case, the math is actually pretty unequivocal. We sell something that's worth 100 and we buy back our stock that's worth 60. And what results is that our shareholders actually get more 10 cent per share than they did yesterday. Every single day, they're actually getting more 10 cent per share. So the principle behind the buyback is to create value. We've now today bought back almost 23% of free float at the Prosus line. And we've accreted NAV creation of 7-8%, and we'll continue to do that. So the program is performing as designed, and we continue to really appreciate the position we have in Tencent because it will continue to create value over time. Our shareholders can benefit from even more accretion when we do the buyback.
Okay, and not compromising then, the extent to which you can reinvest in growth.
Well, we have a pretty healthy balance sheet, and we think that given what we see in front of us, that's sufficient for now. The program doesn't need to be redirected to create more capital for us to invest in growth.
Absolutely. On this, on this track of creating more value for shareholders, with the benefit of hindsight, Ervin, the Prosus spinoff and cross-shareholding, you maintain that was a good way to add shareholder value as well, right?
Well, when it was executed, at first the listing of Prosus in 2019, about 5 years ago, and then the subsequent exchange offer, where Naspers shareholders exchanged their shares for shares in Prosus, that was intended, both of those moves were intended to move market cap off the JSE because Naspers we were too big for this market. Unfortunately, we love this market, but we were running into constraints, and our shareholders were running into constraints because of limitations of what they can hold in any one position, given the index, the weight we were in the index. So yes, the answer is that was necessary. And we think that in retrospect, it was still a good move. We created a bunch of complexity in the meantime, and we have worked hard actually to reduce that complexity. You may know that last year we actually removed the cross-holding between the two that emerged from the 2021 exchange offer. So the structure is actually much simpler today, and we think shareholders benefit from that.
Okay, well, if share price movement, anything to go by, investors clearly trust that you and the rest of the management team know what you're doing, right? As a parting shot, Ervin, what should investors expect from the company in coming years?
Let me first say the share price has, of course, we watched it and we are happy that it's gone up recently, but I just want to make sure that your listeners and watchers know, we also know that we need to deliver. Much of that share price increase recently is because of the macro uplift in China, right? So we can't take credit for that. And I want your listeners to know that as that was happening, we were very clear with our team. We can't take credit for that. We have a lot to deliver. And so what your audience should expect and what our shareholders should expect is we will be utterly focused on creating the conditions to deliver and exceed our previous performance in terms of our operating portfolio and profitability and growth. And we will deploy new capital into the ground, we hope much more prudently than we've done so in the past. And we will continue to work to reduce the discount over time. The buyback program persists. We will fire on all of these cylinders to try to create value for our shareholders. So that's what people can expect from us.
Well, certainly that kind of authenticity as well, Ervin, buying a whole lot of trust as you go along. So best of luck to you guys as you grow this business forward. Ervin Tu is a Group President and Chief Investment Officer at Naspers and Prosus.
Great to be with you. Thank you.